Welcome back to What the Heck is Going On Today. We're covering three things: the PGA LIV merger, we're going to talk about remote working coming to an end, and we're going to talk about the Fed's new move to pause rates and what we should expect in the future. First thing we're going to attack is probably the most controversial one, which is the PGA LIV merger, and the add-on that came out today is the Justice Department has notified the PGA Tour that it will review the tour's planned merger with LIV Golf's Saudi backers for antitrust concerns. Okay, for anyone who hasn't been following this, I'm going to basically bring you up on what the controversy is. The PGA owns golf, right? We all knew that. Well, the Saudis wanted to get into golf and they saw an opportunity. So the first thing to note is they saw an opportunity. So they created LIV, which is financed by the Sovereign Wealth Fund. And what they did is they started going after the big players on the PGA and offered them a ton of money, right? They saw that there was an opportunity to pay them more, that they weren't getting paid here. There was no competition in the market, so they offered them more. And what started happening? PGA players started leaving. And so now you saw the PGA on defense for the first time. Where they took it, and this is the interesting part, is they started basically taking the moral high ground. And I believe they did a press conference talking about families who lost people in 9/11. And, we're really putting pressure on the people that were leaving and hoping to put pressure on the players who are staying, that if you go over there, you're doing your country a disservice because, the Saudis are evil, ultimately is what was coming off. Now, here's what's interesting is now they get into a merger. So you've now basically made everybody feel immoral for doing it, and then you merge it. I think is a very, very bad look for the PGA. Now, I'm completely staying out of the controversy on both sides. I'm just saying if you take the moral high ground, what you should do is hold to that and not even consider the merger. When you merge, then it looks very fake, and it actually looks like all you do care about is the money. I think their reputation is going to get hit for that. The thing I really want to talk about, though, because I think it's relevant, is with this new generation, they don't have the same view of loyalty as, how my parents were, or even like a part of my generation. And so what you're seeing, the trend in the workspace is somebody works for somebody for, let's say, 2 to 3 years. They leave, get a new job, and they do this every 2 to 3 years. And what data shows is they actually make more money by doing that. So the person who sticks around and is loyal to the company makes less than the person who's jumping around every 3 years. What's fascinating is think about the players who stuck with the PGA, who didn't grab the bag. They're now in the same tournament as everyone who left, and they're not going to be rewarded for it. So it's almost like a real life example of what the youth is doing, is they know that there's no reward in loyalty. The other thing, I just went through this with my phone service. I've been with AT&T for 15 years or something like that. On my plan, I'm paying, $160 a month for our family plan. It's unlimited everything. I get a call from my wife, and she goes, I just got this offer from Spectrum. It's like $35 a month. It's totally unlimited. It's the same cell towers. I think we should do it. I'm like, yeah, we totally should. So even the companies create incentives for new people, and the people that have been with them the longest, they don't really reward. So I think that's really fascinating and a representation where we're at with not just a culture, but how our companies are thinking. The second article on the Fed and what we're dealing with interest rates. The Federal Reserve Chair Jerome Powell said on Wednesday that the central bank will leave its benchmark interest rate unchanged following 10 consecutive increases. Okay, when he was speaking, he actually said we're going to skip this rate hike, which many people believe that the next meeting and probably the one following will see an additional rate increase. The expectation is going to be another quarter of a point, but they are saying it could be a quarter to half a point increase. This one I think is interesting because when we got the job numbers back, there were way more jobs created than we anticipated. And so when you look at what the Fed's mission is while they're driving the rates up, it's to cool down the economy. They're trying to get less money spent. And really what that means is you see unemployment rise. So we have to ask ourselves if a lot more jobs are being increased, are they really bringing the demand down in the way that is going to bring inflation down to the targeted 1 to 2%. Now, a bunch of information did come out yesterday that inflation from month to month has come down. I think it went from like 4.2 to 4.1. But it is still significantly higher on where we're targeting. So the question really is the rest of this, let's call it 2.5%, going to be pretty sticky? Is it going to be more difficult to get out of the system than we're anticipating? The other thing is, when you look at the 1970s, we struggled with this like stop and go approach. We were really getting hit with stagflation. And so what would happen was the Fed's policy would be loose, so rates would be down, a lot of money and a lot of demand in the system or in the economy, and then inflation hit. So they tried to bring demand down by raising interest rates up, same thing we're experiencing, and they ended up stepping off of that approach too soon, and then they went into inflation again. And so that's really what we're trying to avoid is knowing when to stop the rate hikes so we're actually bringing inflation down, but not stepping off the gas too soon that all of a sudden we see demand step up and inflation increase as well. Another thing you've heard everybody say is they're trying to have a soft landing, right? They want to slow it down, but not put us into a big recession. The important thing to note is that the plane hasn't landed yet. It's still in the air, and we're trying to figure out how this is done. My expectation is I think rates are still going to go up. I don't think we've done enough to bring inflation down. And I think even at 4%, it's impacting too many families in a negative way. So I think inflation is going to be here a little bit longer than they think. And so this is what I would either be mindful of or start to think about. A lot of business, a lot of investors, a lot of realtors are talking about how the Fed's going to bring down rates really soon, right? You'll hear realtors say, buy a house now because rates are going to come back down. And they'll also say, buy the house or marry the house, date the rate. That part is true, but just be mindful that the rates don't have to come down soon. And then there's an additional question on if rates will ever go back down to where they were. I actually think there's a lot of argument that they may never go back to that low again, where I do think they'll slowly come down a little bit, but not back to where they were in 2021. So keep that in mind. We'll keep you guys updated on the Fed's decisions here at the next meeting. The last one, and this has kind of been the talk as of lately, that the golden age of remote work seems to be ending. And the Wall Street Journal is reporting that even tech firms, the first industry that told employees they could work from home forever just a few years ago, are getting engineers and project managers back in the office. So number one reason is remote work is bad for new hires and junior employees. Now, this one is not nearly as controversial as it sounds, especially when you are new on the job. Being physically present can be an enormous leg up. And even the supposedly anti-office Gen Z workers acknowledge the overwhelming truth. We know empirically that you do better if you're in the office, when you're meeting people, when you're being onboarded, or you're training. And then they go on to say, and I think this is the interesting one, that nearly 1/3 of employees told Paychex that they found their onboarding experience confusing. That figure jumped up to 36% for remote workers, who were the most likely to feel undertrained, disoriented, and devalued after onboarding compared to other counterparts. And this is a big percentage of people that end up quitting. This one, I think that one's actually a pretty obvious one. I don't even know if I need to explain it that much. When you're trying to teach somebody something or getting them involved in how the business is, it is much more difficult to do online than in person. You can make the argument that for somebody who's been here a long time, knows everyone, knows the business inside and out, okay, then there's the argument that working hybrid or working remote can make sense. For new employees, basically what the data is showing is it is very, very difficult to do so. Number two, workers admit that remote work causes more problems than in-person work. Okay, so when executed incorrectly, hybrid work plans can create discordant, unproductive teamwork. That's especially true when teams don't make an effort to align their in-office days. So basically what this is saying, if you don't have a consistent schedule for everyone, right? Everyone can work remote on Wednesdays and Fridays, but Monday, Tuesday, Wednesday, they're in the office. Then when you go into the office, everyone's here. You get the full in-person experience. When it's not coordinated, you'll have somebody who works remote come into the office to work because it's forced, and then all they're doing is sitting in their office by themselves working from the computer, which they can do at home. So, I think companies are having a hard time keeping the schedule consistent so that there's no problems or a worse experience by calling them in. Number 3, remote workers put in 3.5 hours less per week compared to in-person workers. Okay, so how the pitch to hybrid working started in the beginning, that there was a percentage of your time that was spent driving to work. So if you remove the drive to and the drive home, you have more time at home to get things done, or resulting in you being more productive. What the study is starting to show is that employees decreased time spent working and increased their leisure and sleeping. So people who are working from home are sleeping longer, they're taking longer lunches, they're running errands, they're picking up the kids, they're doing more things that we would be involved in our lifestyle, and it's resulting into less work being done. As a business owner, that's gonna be a hard one. Like, there's a strong argument that if you're getting everything I need done remote, then okay, fine. Then it's just like a preference on seeing you or not. But when you're getting less work done and cost of employees only going up, that one's gonna be a pretty damaging one. And then 4, productivity plummets on days when everyone is working remotely. Okay, so this is maybe a little bit similar to what we just discussed. Workers themselves, okay, here we go. Other experts more skeptical. What I suspect is if you took out all of the time at work talking about the Super Bowl, politics, your weekend, etc., working from home would involve more actual working minutes than working in the office. Workers certainly beg to differ on this point. According to a recent Pew Research, pro-remote workers, especially parents and caregivers, have a better work-life balance and are more productive and focused. According to the survey of white-collar workers from Slack's think tank, Future Forum, those with full schedule flexibility showed 29% higher productivity scores than employees with no flexibility at all. And remote and hybrid workers reported 4% higher productivity than their counterparts. Okay, and then here's the last one. This is what I would totally agree with, actually. The survey is showing that when they interviewed business owners who had to make layoffs or cut people, they said that the first people they would cut were those that were working remote. My whole 2 cents, and I think the big driver for me is really around culture. As a business owner, I've always found it very difficult to maintain the culture when you're working remote. And when you think about like the total team and those who are all working together, you really have 2 options of retention. You pay somebody more than anyone else is willing to pay, which there's always going to be somebody who will pay more than you, or, and maybe a combination of the 2, you create an environment where they enjoy working, they feel valued, a part of the team, and that there's upside for them by sticking around. That part is the part that I think is very difficult when there's a hybrid model. If we're around, I can be in person with everybody. I'm definitely a people person. So I feel like it's a lot easier for me to maintain that environment where people want to show up, get things done, and are enjoying it. On the computer, I've really, really struggled to do so. But let's finish it with this one. Right now, out of all the asset classes in real estate, office is the one that's getting hit the hardest. They're at like north of 20% vacancy, which is like great financial crisis numbers. This is 2008. So you're seeing prices come down significantly. You're seeing a steep, steep correction. Well, if this article is right, and you're watching tech companies bring back people full-time who have the strongest argument to allow hybrid working, the question becomes, have we really seen office or the work environment change forever? If we're gonna go back to the same amount of remote workers pre-2020 as there are post, then I think office space is gonna come roaring back. And if it does, that means there's the potential, what would you call speculation, that you can buy at a discount today. And if this thing comes back, you're gonna make a lot of money if it does. So really fascinating. All right, have a great week. Thank you guys for tuning in. If you're not subscribed to the channel, make sure you subscribe. Hit the like button. It does a huge amount for our algorithm. Our channel is growing at a great rate now. I will see you guys next week when we figure out what is going to happen then.